What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 13th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we're going to be diving into the 3 key things we need to see in Bitcoin's price before we actually start breaking back above the previous all-time highs at 65K and setting in new all-time highs, as well as the further continuation of the bull market. So we're going to be diving into these 3 things, and I'm also going to top in a 4th bonus potential site that we'd want to look for. But let's go ahead, let's not delay it any further, guys, and dive right into it. So I want to start here by taking a look here at the current state of Bitcoin's price. I know a lot of people are concerned with the recent sell-off that we had where Bitcoin's price went down double digits, down 11% within a 24-hour period. We actually went a little bit lower than that, but we came up to reduce some of that downward price action. And again, when we take a look at the general analysis here, Bitcoin looks to be building support on a previous range of resistance, right? We like to use these different lines, whether they're stagnant lines of resistance and support across the board, or if they're diagonal lines in this case, where you see lowering lows or rising highs, right? Whatever it might be. But we can start to see correlations here where Bitcoin's price starts to face these levels of resistance, breaks above them, and next up needs to be able to find any valuable levels as support. And that's exactly what we did back here during the sell-off. Buyers started to come in at this support line here, and as we continue to hang around this range, we're not seeing any dramatic sell-side pressure. So this is already a good sign here in regards to price. But let's go ahead and talk about the first key thing we want to see here in regards to price. The first thing we want to see here is we want to see multiple retests of this previous line of resistance in order to solidify it as support. Now, why is this so important? Why would we want to see this tested multiple times? Doesn't this just mean that price is going to drag on around this range for a little while? Well, to be completely frank with you guys, yes, it probably is. And I'll go ahead and talk about why, historically speaking, we can be so confident of this. So it's usually very, 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 very rare that you will ever see price just come down, test a previous point of resistance, make a new support, and then just continue climbing higher, right? Maybe if you're at the peak of the market cycle or getting close to it. When in reality, as we've talked about in this channel, and as we'll kind of pitch towards as we go through the video, we're still well into the center part of the bull market here. This is the equivalent of July of 2017. We haven't even seen peak euphoria yet, in our opinion, right? So what we want to see here is multiple retests. So this would generally look like, and we can get a drawing tool here. For example, use the brush tool. It's going to look kind of like a rough mock-up here, but multiple retests here of this line. Now, this is the first thing that we want to see here, and the reason for that, as we take a look at history, we can see multiple tests here on support, right? This was a descending line of support here where we had slightly lower lows every single time, right? And you can see here as well, we had consistent multiple retests here of around 30K before moving higher. It always tends to be that we test a certain range of support multiple times. And the reason for this is because it's a test between who's in charge. Is it the bulls or the bears? Is it the buyers in this case? Are they buying more than the sell side, or vice versa? Is the sell side pressure outweighing any potential new buyers coming in? And that's determined through the weight of market orders. Are there more people generally market buying or market selling that's going to push the order book one way or the other? And that's how market price is determined. So what we see here is kind of a contestment of the bulls and bears here during these situations, right? And that was, for example, if we get rid of some of these lines here just to see a counter example, right? We can see here that with this previous support range being broken, we can see that the bears were weighing it down multiple single times until finally the bulls came through with a peak day of record volume that we hadn't seen in nearly a month, where prices soared through, cleared through. We were able to turn that previous resistance range into new support and climb higher. So we're expecting the exact same thing here. We want to be able here to see that the bulls are in charge, that they're able to solidify this range, so therefore we can move on to step number 2. And step number 2 is setting in higher lows and higher highs. Now, this can happen simultaneously with testing the support range, but it's usually going to happen afterwards because we're going to be testing this line multiple times. Now, we're in a bit of a unique situation that, as you can see, this line is ascending, right? It's setting higher lows in this case with previous lower highs in this case, right? So you can see that generally this line is moving up where Bitcoin's price is correlating or coming back to it. So again, as we zoom in here to the chart, the first step we want to see again would be multiple retests of this line, right? Probably something along this line where we're keeping relatively neutral to the beginning part of October. And then we move on to step number 2. And this is going to be what we want to see next, which is going to be higher lows and higher highs, right? Now, again, I'm just bear in mind again, guys, I'm just drawing here on the chart just to kind of signify the important aspects of what we're discussing, right? Don't take this as a clear prediction, nor, as you all can see, I'm not an art student by any regard, so I hope you enjoy my Picasso drawings. I might get into the NFT space. But you guys can see here very clearly the key points, what I'm trying to signify here, which is that we have multiple retests of a line, that's stage 1, and stage 2 is starting to bridge up and have those higher lows and higher highs, right? Where each high is higher than the previous one and higher lows. This is a signification, again, that the bulls are in charge, that the trend is optimistic over pessimistic, right? That we can see every time that buyers are coming into the market, they're driving up prices higher than the previous time. And then outside of that, when markets sell, in this case, where people start taking profits, the bulls are still outweighing the bears here in this case. We're seeing more people buying in at these higher lows than there were back a couple weeks ago, which is again showcasing a net positive change in inflows of capital into the cryptocurrency space, right? So these are the first 2 steps here, right? Then the third step, which I know might seem kind of obvious, is not only inevitably breaking past the broader term relative highs, but eventually setting up the stage and continuing trend number 2 of setting those higher lows and higher highs, where we eventually break above the previous all-time highs. And you see it clearing through there. And the reason I'm talking about this third step is a quite significant one is because it's not an easy challenge. Breaking through all-time highs can generally take, as we drew here on our chart, it's a little bit more of a simplified version. This last phase here can usually take a pretty long period of time. So what do I mean by this? Let's go ahead and take a look at history here. Right? When we cleared through back up to this previous high range, notice when we came up here towards right under 20K where we set in those previous highs, we had multiple pullbacks here, right? It took us anywhere from around a month here as we started to get up towards this contestment range to finally see a breakout, right? And that can get a lot of people nervous. It can get a lot of people funding out of their positions, getting out of the market saying, I missed the top last time at 20K. I'm not going to miss it this time. And that's exactly why you see resistance at these levels, because people have the misconception that just because something's back to all-time highs is expensive. And that's not exactly true, because every time you're clearing to new all-time highs, and generally in any bull market, you're going to be revisiting those previous all-time highs and you're going to be clearing through to higher levels. It's the same reason why you set higher lows, generally speaking, during the bear market from where you were the vast majority of the previous cycle. All right. So again, it's going to take a little bit of time here. But as we contest towards this range, and I'll go ahead and show you guys what it probably looks a lot more like. You'll come up to this range, maybe set in again another pattern of higher lows and higher highs, and then we eventually, boom, we break out. So this is a very, very rough drawing here, and it showcases, and I'll go ahead and talk about this here. Notice how the drawing, the rough estimation I gave here, it's probably going to look a lot more choppy than this, but it's going to probably come somewhere here towards January of 2022. Why am I holding to that conviction? Why do I think the conviction here is that we're going to see Bitcoin's price take a couple of months here, really going throughout the fall and a good part of the winter here, right, to see new all-time highs. The reason being for this is because of what we saw last time when we revisited previous relative highs to all-time highs, as we were going from the bottom to the top of the cycle, just to set some time frame estimations. Now, I do not believe we are going to see it take 495 days like it did last time when we set in our highs, our relative highs here, bear in mind, in June of 2019, right? Here towards November of 2020. I'm again I'm staying on the idea here in this case that we're witnessing a mid-cycle correction. So the best thing that we have to work with here was the previous mid-cycle correction, as we rallied here from $3,100 at the lows all the way up to $14K. And And then we came down here again with the sell-off from the event that we all know of back in March of 2020 that changed the world, right? We can see here that we had a nice cupping formation here where we were again having lower lows and lower highs. And after that, we had the catalyst here with the surge of liquidity from central banks. We started setting higher lows and higher highs in the broader trend time frames, revisited those previous relative highs and broke out. And this is 495 days. I think as we get further into the cycle, as we've seen historically, that momentum picks up here. And we're not going to have to wait 495 days. But we are considering that each cycle, these broader Bitcoin cycles, are expanding, right? And we're expecting that a top for this market could be somewhere in November of 2022, right? This next year we're stepping into, more than a year out from where we are now, to reach 200K. So if that's the case, well, what seems reasonable here? Let's go ahead and take that date range tool we used down here. You guys can access it on TradingView here on the sidebar. Right, we got the date range tool there. We're gonna go ahead, drag from here, and look what happens when we come over here towards around the end of the year, 260 days, right? You could rough it off here at 250, maybe a little bit early. Maybe we get a Christmas special in this case, who knows? But generally speaking, about half the time frame here, right? And just for simplicity's sake, we could drag it here to 250, right? But half that time frame leads us right here towards the end of the year. What I'm basically predicting is that as we go throughout the cycle, momentum picks up here. And after corrections, there are periods of time where you're going to need to have a reset. You're going to need to let things cool down. You're going to need to wait for the bulls to really recharge levels of liquidity, to buy more into the market, right? To regain confidence and push prices higher, where market order flow is on the net positive side, not the net negative side. But at the same time, I think it happens in shorter time frame intervals. And it's not just me saying that, that's historically speaking. We tend to see that these corrections are recovered much quicker as we go through the cycle, and the bullish price action, the momentum comes back in, right? So, generally speaking, we're looking for potential breakout above those previous all-time highs in December of 2021 or January of 2022. I think that's a reasonable time frame. And really, again, just to put it in context, guys, it's not too far away. A little over 90 days. About 3 months to work with. I think we've got it. I think we've got it in the bag. And I'll just say, quite frankly, guys, I don't know any other market that's going to be making a roughly 30, 40, 50% move similar to that, breaking out to new all-time highs in the next preceding 90 days. Maybe some individual stocks, but again, we're talking about broad asset classes here. The S&P 500, the mass indexes of equities. I don't see them outpacing Bitcoin or crypto in general by any means. And this is not including the performance of altcoins, which are probably, again, going to continue outpacing Bitcoin as they have throughout the cycle. Now, I want to go ahead and talk about the fourth catalyst here. The fourth thing we'd like to see, because I know the video is titled the top 3 things we want to see, but for those of you who stuck around, I want to talk about a fourth bonus. I want to give you guys a bit of treat for that. So let's go ahead and talk about this fourth bonus. What would we really like to see? Well, as we're approaching and we're completing all of our steps here, let's say the optimistic scenario plays out and we're back towards 65K. The thing that we really want to see as we reach towards that breakout zone is a catalyst. Now, it's not always essential. You don't always need some kind of news event for why price is going to go up or for when price is going to go down. We said that exactly in regards to the correction recently. There really was no news story. But I want to go ahead and talk about what it means and why it's important to have a catalyst. A catalyst is basically that breakthrough story that convinces markets to turn more euphoric, more excited in this case. It also can be what drags markets down. But in this case, we're talking about an optimistic news story, something that's going to change the dynamic of capital flows to crypto. It could be a Bitcoin ETF or rumors of a Bitcoin ETF. It could be, for example, positive regulatory news that helps support crypto markets, or maybe open up access for financial institutions to buy more Bitcoin, right? Anything like that would change the capital flows of Bitcoin as an asset. We're going to need a catalyst, in my opinion. And the reason why is because the macro environment for crypto that supported so much of this rally has changed. TikTok, back a couple months ago, started to really hit the hammer down on crypto, right? Back during the May cooldown. And this has started to change how far and how fast crypto can scale to Gen Z and millennials. It was a hyper growth engine for cryptocurrencies back a couple months ago. It is no longer, as there are many content creators who now don't even talk about crypto. The vast majority who were doing it before have basically vanished talking about cryptocurrencies, because if they use any keywords that can trigger TikTok in that case to see that you're talking about crypto, you can lose your entire account. So they basically immediately killed off the momentum here. And second off, one of the other big momentum drivers, Elon Musk, who had been very, very pro-crypto, it's not that he's negative on crypto, has taken more of a passive approach. And I think this is, again, just from all the Dogecoin stuff. Again, I think that shareholders had applied some pressure to steer clear of being such a discussion piece in regards to crypto. So I think that, again, when you take those two big momentum drivers and we're starting to reel them back, we need someone else talking about crypto. We need someone else rallying around it, making big bets. We need another MicroStrategy styled event. And you need this in all markets. I know it might sound like a desperate cry in this case. Oh, we need this and we need that. And some will say, Nick, we don't need them. We don't need that. To be honest, guys, I'm going to tell you the blunt truth that people don't tell you. And that is that take Bitcoin aside from its moral objectives, what it stands for, the decentralized nature that it offers. It may be decentralized, but if you care about market price, you need to guarantee that there are more inflows than more outflows. Got to be honest with you guys. I'm not going to lie or sugarcoat it, right? We need to have more people buying into the market. It's the same reason why equities keep climbing. You have more people coming into the market, whether it be retail traders buying, whether it be, in this case, the Federal Reserve injecting tons of capital into financial institutions, people being inclined to buy assets in an inflationary environment. That's the bottom line. It doesn't really have to do with fundamentals. It has to do with liquidity injection, with more buyers coming in than people liquidating and capturing profits. That's what markets are, right? And albeit they're not perfect, we need to understand the rules of the game, right? And long story short, again, as I'll kind of point here to this fact, right? We can see here that history itself tends to repeat itself a lot. So we can absorb a lot of information from this if we're not ignorant of it, if we're not taking our own biases to it. We know that we need to see possibly multiple retests here before we can really start to see more movement upward. It's probably going to take a couple weeks, realistically. And then we can start to set those higher lows and higher highs and revisit those previous all-time highs. And hopefully by then, we'll have that solid catalyst. And it doesn't have to happen exactly at 65K, but something between to really give us that momentum to possibly visit next around 80K, 100K, and continue to set those macro higher lows and higher highs, albeit with some corrections, to eventually, in late 2022, get back up to the new all-time highs that we're estimating for. We'll take here a look at the BLX chart, right? I'm going to go ahead and pull it up here for you guys to close out the video here, leading us here to November of 2022, 12 months longer than the previous cycle. And so far, when I look at this chart, it looks like we're on course for that. So, anyways, guys, I'll ramble on enough. I hope you guys enjoyed this video. If you like this, please consider dropping a like. It helps out the channel a ton. And if you guys haven't already and you like seeing content like this more often, hit the subscribe button, hit the bell icon. And as always, there's one last thing I want to share, that if you guys like supporting the channel and want to get more information like this, you can always check out the Dash Report down below in the description. It's a monthly newsletter we write where we have an alerts group where you guys hear whenever I make any kind of trades or positions in the market, as well as getting a percentage allocation of my portfolio. You guys can see what I'm allocated to in my trading account. So if you guys are interested, check out the link down below in the description. That being said, hope you guys are having a fantastic day wherever you are, and I'll see you all in the next one. Take care, everyone.